never really thought about the U.S. running out of ammo. You've got Xi saying that he will take Taiwan by 25, and the guy does everything he says he's going to do. What happens to us when that happens?
But it's got to be incredibly hard to know which one is an AI company that's got some magic and which ones, which are most of them, that are all just vapor. How are you thinking about investing in artificial intelligence?
We had a zero a couple years ago. It was our first zero. It was an Israeli company that was a money change agent between Russia and Ukraine. And we funded it 6 months before Russia invaded Ukraine.
Oh.
I'm Chris Houseworth, a grain originator and accountant living in Pocahontas, Iowa, and you are listening to the Vance Crow Podcast.
Welcome back to the podcast. I'm glad you're here. Today, Rick Holton, the venture capitalist, returns. Longtime listeners of the podcast will remember that I had Rick on during COVID, and the government had started to pump huge amounts of money into the system, and I wanted to talk with somebody about where's all this money going in the stock market. Well, Rick and I have maintained a friendship over these last few years, and I invited him to come back in and talk about the world of venture capital as inflation is going up, as people are losing jobs, and as cities are developing in the way that they are. This is a fantastic conversation with a guy that thinks about the world pretty differently than I do. I enjoy hearing Rick's perspective, both about money in the economy, but also about the city of St. Louis and really how this is a microcosm for cities all around the country. We're going to get to that interview in just a moment, but first, I want to talk about legacy interviews. If you're a listener of the podcast, you know that I sit down with individuals and couples to record their life stories so that future generations have an opportunity to know their family history. Just last week, we had a couple in from Montana. This couple had a wonderful story about raising their kids, living on a homestead, and really building their lives. Throughout their stories, they were able to communicate to future generations what are some of the most important things they can know about being a part of a family. What can you do to make sure that you're a good person? And how can you live your life so that at the end of it, your family is interested in your story and want to make sure that they get passed on? We are just a few days away from Father's Day. So if you're interested in getting a legacy interview for your father, or let's be honest, oftentimes when you get dad a gift, you get one for mom too, and you could do an interview for both of them, use the promo code FATHERHOOD at checkout for $100 off either a full or half-day interview. You can learn more by going to legacyinterviews.com. All right, without further ado, let's head to the interview with Rick Holton. Rick Holton, welcome back to the podcast.
It's great to be here.
So you are with FinTop Capital, and you guys were famously with Silicon Valley Bank when they imploded. What happened, and what is it like to be a client of a bank that fails?
What happened with the bank, or what happened with us?
What happened with you guys? Yeah, I mean, I know what happened to the bank.
Know what happened to the bank. So Silicon Valley Bank was a brilliant creation because it was ideal for people like us. And a lot of people don't know what the magic was there, but they, like a traditional bank, they loan money and all that stuff, but what they focused on is fund managers like us. So they actually have lines of credit for people like us that we can use to fund businesses. Then we do our capital calls and pay it back.
Wait, what does that mean?
So we have a fund, set amount of money that LPs commit to us. They look at our documents and they say, okay, you've got $300 million coming to you. We'll give you a line of credit for some portion of that so you can go do deals, write checks, fund the deals, and then you do a capital call to pay off the line of credit. So it lets us smooth. I don't want to call capital if I don't have a deal to fund.
Because otherwise you're paying them on that capital.
Well, it hurts our IRR, and you know how to manage your cash better than I do. So when you're sitting on the cash, it's better for me because it's not counting against my IRR for the return. So I'll actually borrow money, and they get better interest rates doing this kind of lending. More, it's better interest rates than like a mortgage. So they loan us money to go do 2 or 3 deals. Then we do a capital call, and we pay down the line of credit. They also loan money to GPs, so we can actually commit more LP capital to our funds, so we can go and tell you as an investor, like, hey, The GP is heavily invested. We're an anomaly. We're 20% of the LP capital.
All right, and LP, GP, what are these terms?
Sorry, the general partners, people that run the fund, the LP, the limited partner, the people that invest in it. So when I go to you to get your hard-earned money to commit to my fund, I say, hey, by the way, we're 20% of the money in this thing, so we're putting our money in alongside of your money, so we care about the returns. Very uncommon to have that much, GP capital in the LP. But they'll loan us money to make our LP capital calls. So they're very connected into us. Then the magic is they're sitting on all the LP money that comes in, the capital calls, that sits in the bank. They're loaning money to the GP. The real magic is then all of a sudden when we put $10 million in a company, the operating account sits at SVB. That's how it grew so fast, because all these funds were raising all this money, and then they invest in portfolio companies. The portfolio companies bank at SVB, so it was a magical system. They ended up with way too much money. So they were buying all the government securities, interest rates run up, the bank bust. They also were very tech forward, so think of credit card processing, ACH, all the movement of money inside operating companies. They were very tech forward because they were Silicon Valley Bank. They had all the best technology. So it was a bank that was business ready to do the digital transactions. When it blew up, a bunch of our portfolio companies were running all of their stuff through the bank, and the bank was busted. It was a scary weekend. A lot of our LPs thought we'd lost. We had just done a capital call. We actually had a line of credit. We owed them money, and we had a bunch of cash from a capital call sitting in the bank. And we were with lawyers all weekend saying, what happens? A debt is still a debt in bankruptcy, and we would owe them the money, but our money was gone that would have just washed out. It was the weirdest thing. It got bailed out, but what it did for us is we actually own a bank that's a fintech bank that we were building for all of our portfolio companies. We literally flipped all of our portfolio companies on Monday to our bank, Thread Bank. And so we were there to solve the problem, and now our bank's doing really well because we moved all of our portfolio companies. So it was kind of a blessing, but it was very scary.
Well, let's go to Thread in just a second, but it's kind of like there's an irony there, right? Like, so banks make their own money by, you take in money and then you lend out most of it, not all of it, and then that money gets deposited back in the bank and you lend that out. And since they were doing it to themselves, you said this stacked up really fast. Should they have known? Should you have known that this was like a bomb waiting to happen?
It wasn't a bomb until the Fed did what it did. It's never happened. Though most banks, conservative banks will pressure test a 3% rate hike over 18 months, and they did 5 and 12. You just can't forecast that. It's just an anomaly.
Yeah, and while that was all going on, the lead up to it, the banks were being told, hey, you should invest in these government securities. Hey, you have too much
standard practice.
Liquidity. Yeah, but I was with the bank at the time, and they were certainly promoting that more than they had ever done it before. So It almost seemed like they, pushed people into it. I think it was not intentional. I don't think they meant to burn it down. But when you look back on it, it looks pretty nasty.
But they weren't a normal bank. A normal bank, a coffee shop deposits the money in in their checking account, and then that money's aggregated. It's like A Wonderful Life, right? Wait, Joe,
it's in your house,
it's in your
house,
store, all that. So they weren't out building a mortgage portfolio. They were doing venture lending. They would loan our companies if we would. They got too big for we do Series A stuff, but when they started, they did. If a company raised $10 million of equity, they would put venture debt on it of $5 million. I think their minimums were up to like $50 million. So that's how they were loaning their money. They weren't doing commercial real estate and small business lending, and they weren't doing normal bank stuff. So they were doing venture debt, but other than that, they were just sitting on piles of cash. They weren't really a normal bank in that part. Like what we do, we have some loans, but we make most of our money at Thread off non-interest margin stuff. It's credit card processing, and we have portfolio companies that do loan origination and syndication. So it originates in our bank, but we don't hold the assets.
With Silicon Valley Bank, I had read that a lot of people wanted to be involved with them because they were a giant network. Like you would get to meet all sorts of exceptional companies and get opportunities that you wouldn't get.
Not really at our scale.
Not at your scale.
The big firms, yes, syndication and all that. We're Series A. You're talking about the big firms that were putting billions of dollars. We're sub-billion of assets under management.
So let's talk about your fintech bank. It's called Thread.
Yep.
And what makes it what it is?
So we have this whole, the idea started, my partner Joe's always loved banking, has been in bank tech since I worked for him in engineering school. And all of our portfolio companies were working with other banks to run whatever product they had, and it would take forever for these banks that weren't tech forward to get the technology working. So his thesis was, if we bought a bank, we could be tech first and plumb all of our portfolio companies into the bank, and they could scale. Because we put money into a bank tech deal, it could take 18 months for them to get integrated into a bank. So they're burning our cash while they're just trying to get onto the bank rails. That costs us money. So,
and when you say that, you mean being able to pay their vendors and being able to run their payroll, or things more complicated than that?
So we do the bank tech stuff that we do is we have bill pay tech. We sold it, but it was a competitor to Bill.com. So having a fintech like that needs a bank, you got to be in the banking system to integrate with a bank is hard. We do deals with like JP Morgan Chase. It takes forever for them to turn stuff on. They invested in a deal called Truvada. They invested in Truvada with us, and it took them 18 months to get it live.
I see. So what you're saying is, if you're running a company that needs to use the banking system, yes, instead of saying, all right, not only do we have to run this company, we got to go find a bank we can trust, a bank
yes,
that'll work with us, and then because banks are slow, they're not likely to make the adjustments that this new
correct,
fast-acting fintech company is trying to do. So you bought your own and built around that.
So we bought it for $1.
Okay.
Overcapitalized it, and then we have a tech group that can spin up our fintechs very rapidly. We bought a consulting firm called Core 10, which is a .NET programming shop. So they basically assess the software that we're looking at, roadmap it, we do the deal, they get it live on our bank right now, so they can be in business. So we're not burning capital waiting to be able to do stuff.
A hell of an advantage if you have that. Yeah.
Well, now we get better deals because they know, FinTop actually has a bank.
And that's part of the solution that we're getting out of this whole
and
thing.
It's pretty unique for a venture capital firm. The firm doesn't own the bank. That's illegal. We don't own the bank as a firm. The people that are the big LPs in FinTop own the bank. So it's a friendly relationship, but it's not actually connected.
And who's the charter with it? Is it a state bank or a
state? It's Tennessee, so it was in Eastern Tennessee. We looked at a couple of banks, but we ended up with this one.
You've been in venture capital for a while. Have you been in banking before this?
Nope.
What have you learned about the system by being involved in a bank?
Very antiquated, very regulated.
Very regulated.
They don't understand what's going on. One of my partners, Jim McKelvey, was deputy chair of the St. Louis Fed. He's involved with Thread as well. We've been coaching the regulators on fintech. They actually ask us for help to understand, what's going on, but they're trying to regulate a very old industry that has very new stuff happening. So that's why they asked him, from being a founder of Square to be on the Fed board, how do you track money? Your Square cash account, Venmo account, those things don't actually hit the bank rails.
I didn't know this. No, tell me more.
So if you and I each have a Square cash account, if I send you $100, the Fed doesn't know that. The money's just changing designation on Square's general ledger. It's not actually in a bank. So that's how that works. So we're just trading money, and all of us can trade money around, but how do you track the velocity of money in the economy when you don't see the flow in and out of banks?
This is actually remarkably similar to Lightning and the Bitcoin system, where there's like an abacus, and it's just like sitting right outside the system, and until you decide to cash out,
So how do you monitor it? How do you regulate it? It scares the Fed because they've had a system that they've used for a long, long time, and now all of a sudden, but we're all doing it this way. And there's always been an unbanked community. It was called cash, the gray market. Everyone's doing that. Well, now people are using digital flow of funds, but it's not tracked. They're starting to, and they're figuring out how to, but it's very scary to them, because how do you try to manage an economy when you don't really know what's going on?
And so you feel like the regulators are coming along with you guys?
They're trying.
Yeah.
They mean well. It is very confusing, and it's fast moving. So the stuff they're trying to regulate now is from 3 years ago, right? They're way
You only
behind.
write regulations after a problem's happened. You don't even know what could be going on.
Right. So they're trying to contain everything and hold it back, and it's a very expensive process to work with the government. It's good. We're supporters of the regulators. They're trying to do the right thing, but when you can talk to them till you're blue in the face and say that's not how it works. So it's square peg round hole. They're trying to make everything look the way it used to look, and you'd say you got to separate the way it used to be to what it is now. Like, you got to get with the times. And
just about a year ago, I guess a little bit more than a year ago, that the SVB and the other banks kind of had this contagion after the interest rates went up. Had you ever experienced anything like that before?
No. I mean, I did in 2008. Obviously, we experienced a lot of scary stuff, all the TARP money and all that stuff, but not this rapid of an increase in interest rates.
Yeah, because in 2008, somebody couldn't just go to their phone and say, oh, you know what, I'm going to move it from that bank to this other bank, and as long as that, I can log into my account, I can move it.
And there was a lot of failures back then.
Yeah.
But I actually you remember TARP?
Yeah, well, vaguely. I would have been pretty young in the system, but yeah.
So I was pretty young too, but we ended up for 2 years, all that TARP money that got pushed out. I had a classic car dealership, and we had numerous regulators come in where people had used TARP money to buy classic cars. We weren't in trouble, but they were following funds, and so we had several meetings where people had abused the TARP money and thought they were having some fun, and they got pinched. But that was crazy times. A lot of people got in trouble.
I just read in the Business Journal that CRE lending is getting tighter. Like, there's more delinquencies than there have been. What do you think about the state of the economy right now, banking in particular?
Private credit is exploding because banks are holding back because they can't make loans, because they have to maintain liquidity, because everyone's waiting for
the shoe to drop.
Yeah, and you're reading about it. I mean, there's the uptick in bankruptcies, and you're seeing banks take back, especially office. So it's pretty scary if you're over levered. You can have a really good asset, but if you've got too much leverage on it and you didn't fix rate your debt, and all of a sudden everything costs a lot more. And
yeah, and buildings that made sense to own just a few years ago, now if you go to refinance, they don't make sense to own, and who's going to take that on, and who's going to buy them? Like there's
people are walking away, and the banks are getting stuck with it. And as soon as you've got the bank-owned real estate, the BOR, as soon as they've got that, it changes all their ratios. So they've got to have enough cash to offset it, and so it's very hard to get loans from banks right now.
You know, my only real experience with like market crashes. So when I was really young, I lived in an ag community when pork prices fell, and like all of a sudden, my neighbors were like totally bankrupt. Then I remember, I vaguely remember Black Monday because my dad was a broker, and so Mom had us all get dressed up and cleaned up because Dad had had such a bad day. And then the 2008 crisis, those were like very sudden.
Yeah.
Do you expect that whatever is going to happen, the shoe to drop, will it be gradually or would it be sudden?
We sit and we call it red teaming in our office. We sit and think about, so we don't get blindsided again, what could it be? China invading Taiwan. You just read 2 weeks ago that, you know, our stockpiles on munitions is low. Boeing just got a $7.5 billion contract to make more smart bombs because they're depleting the stores by sending it over to Ukraine. Like, I don't think about this stuff, right?
Right.
It's not what I do. But you read something like that and you go, never really thought about the U.S. running out of ammo. You've got Xi saying that he will take Taiwan by 25. And the guy does everything he says he's going to do. So what happens to us when that happens? Does it just happen? Or is there a war? I don't know. That's not what I do, right? What would we do? We talked about it this morning, actually, and said, you know what? If they did it, it would probably be a global flight to quality, which would be buy the S&P 500 in the United States. It's the safest place for your money. You know, the S&P's outperformed emerging markets, developed markets globally. I mean, we've been the highest performer globally, you know, in the equities. But your guess is as good as mine.
Yeah, I mean, you think about an international incident. It used to be very apparent that the U.S. was the safest place, but I don't think the Russians would agree that they want money in the U.S. system.
They don't
right?
have the option.
Yeah, but I mean, like, there's been a lot of countries, at least when I read about it in the papers, and it's very difficult to discern what is real there. Other countries are trying to find ways to.
They are trying, and they're not doing, because where else do you go? I mean, that's the reality of it. Where else do you put the money? That's why, I mean, the foreign flows of funds into the S&P is a lot.
And as a venture capital firm, you presumably have to keep finding good deals no matter what goes on in the world, right?
Yeah, I mean, you asked about the state of venture, and the industry got hammered in 23. We look at our portfolio, it's actually performing quite well, but valuations went in half. So it's demoralizing. We go to work every day, things are going great, and you get told we use a third party to mark our marks so there's no conflict. And then they tell you, well, multiples are in half, so even though you doubled the revenue, your business is worth the same as it was. And we're like, how's that possible? But it is possible. You have to look at the market. They have to look at the market and value it accordingly. We're selling several companies right now that are much higher than the marks that they gave us. So we did they undervalued our assets. We don't mind that because it makes us look good when we
sell for more than.
Yeah.
Yeah.
The worst thing in the world is the firms in 21, 22 that were marking their own marks or they were raising money at such stupid valuations on their existing companies that they mark up to the last round raise, but they were the mark that set it, and they were overpaying for everything. So they had these incredible run-up returns, through COVID 21, 22. And then all of a sudden they had to mark their portfolios down 60, 70, 80%, like Tiger Global. I mean, those guys were doing a deal a day. Like no diligence. They were just writing checks. We never participated in that stuff. Our model's a little different. We're not looking for unicorns, and we look for like 3 to 4x deals, and we like to hold them for 3 years. We get in the Series A, and we'll turn them over to the bigger firms after we do our work, and it's more consistent. We kind of always have an idea who the buyer is for our deals when we invest in them. We're talking to them. We've got a really good network of buyers, so ours is a little bit more predictable. We're not investing in the moonshot ideas that are going to change the world, except 95% of the time they go to zero. We don't like binary outcome stuff. There's usually some value in the businesses that we're doing to somebody, so we know we can at least get our money back. We had a zero a couple years ago. It was our first zero. It was an Israeli company that was a money change agent between Russia and Ukraine. And we funded it 6 months before Russia invaded Ukraine.
Oh.
That was a write-off. So, sometimes that stuff happens, but we've had, over 100 investments, and we've had 2 zeros.
That's
So
pretty good for venture capital. That's like.
But we're also not looking for moonshots. We're not investing in a great idea that may turn into something and may go to zero. So we don't have 100x deals, but we also don't have a lot of zeros. Ours is more predictable. So that's just our model.
Yeah, it's interesting that you're a venture capital firm. You're in Nashville, St. Louis, and I'm trying to think of the other one.
New York.
New York. This is it's not Silicon Valley. It's not LA. It's not. Yeah. So is there an advantage to being in a place like St. Louis?
Yeah, the advantage is that the coasts don't come here. And when you do a deal, you got to know the people. You got to travel for board meetings, and if you got a connecting flight issue, no one's going to give you money. It's work. And when you've got people that'll just walk in your office from down the street all day long, you don't have to hunt very far. Mm-hmm. So the sort of middle of the country, flyover country, people love working with us. They love the fact that we give them the time. We're not arrogant. We're conservative. We've all run stuff. When we sit in board meetings, we're not analysts. We've actually run companies, and when we give advice to our leadership teams, we've actually done the stuff that we're recommending that they think about doing. So it's.
I heard Ray Kurzweil, the other day say, it's not that AI is going to kill you, but not investing in it or using it may leave you so far behind that you'll be left for dead. But it's got to be incredibly hard to know which one is an AI company that's got some magic and which are most of them that are all just vapor. How are you thinking about investing in artificial intelligence?
Good future podcaster for you is David Karandish, if you haven't had him. Great guy. He started Answers.com in his dorm room at WashU, and he's a YPO friend of mine. And he started a company called Capacity, and he started Capacity, I think, 7 years ago, before AI was even a word that everyone was speaking about every day. And he's doing a great job, built a great company. All of our companies are using AI. How they're using it varies from company to company. There's use cases for AI in your development group. So the developers are using AI to better
Write
their code.
Yeah.
That's been a great use case. Marketing, all using AI. In the wealth tech stuff, the large language models is a big part of it. Everyone's building a data lake. You can't really use large language models if you don't have data. So that's thematically big. I've got a portfolio company that uses their data to generate loan books for real estate, and it's incredible. It's used to have to aggregate all this information, give it to an analyst. They would spend weeks putting together a nice loan book that then you can go, shop for debt or equity. And this guy in the last year has built the machine. You click a button and it generates an incredible loan book. So he's going into the automated lending space, lending marketplace.
Okay.
And now if you're a owner, it's in the senior living space. If you own senior living portfolio and you want to raise debt, equity, sell the business, you can click a button and it just puts it all together for you. I mean, we all sit and look at it and it's like, this is magic.
So I'm like very tech leaning forward. I'm always the first to be like, oh, I love this VR. Let's try this out. But with AI, I definitely got scared because I was using, I don't know, I think GPT-3 or whatever one was the most advanced. I was paying for it. And I was having it write up some like calculations that I was going to end up using. And I got pretty far down the line being
the math's terrible.
And it's bad.
The math is awful.
Bad. And so like I don't know, I wasn't like right on the edge of making a terrible decision, but I definitely was incorporating it into like my plans. And then I was like, I better go write these out, and realized
it's wrong.
And you wouldn't know it's wrong unless you go check every single piece of information in there.
So that's very scary. We actually had the SEC come in, Business Summit, it's called SmartX, and they came in and made us, we use AI. I was saying we can use it internally for technology, for coding. We can use it for marketing. Like, it's an internal use case. We are not putting anything out to the client. We're not using AI on the client. And we had some marketing stuff, and the SEC came in and did a site visit investigation and literally made us rewrite some stuff in public domain stuff to get rid of AI. And we're like, we're not using it to trade securities. Like, that's not what we're doing. But it was one marketing message basically was saying that we're AI enabled. So that's how scary that stuff is. And the math is terrible.
I mean, like, it's one of those, it was one of the best things that could have happened to me was having that go so shockingly wrong.
Okay, yeah. I still need to work.
Yeah.
It's good, it's good job security.
Yeah, but it is crazy how fast things are moving. Like, when I use AI, I like it for the language stuff. This is the way I'm writing a sentence right now. Write it in a better way. That's very helpful. But it's there's like it's almost cursed if you ever go to use it to get an image. Like, I one time was trying to get a man standing on a box, and it would put the man in front of the box, and then it put the man on the side of the box, and it'd make the box on top of the man, no matter how many prompts I did. And so there's something to it where, like, it's hard to take an image that's in your mind and convert it into language so that this thing can get it. I'm sure it'll get there, but there's like it feels like every time you go to put something in there,
we're in the second inning.
Yeah,
it's scary. I mean, it's scary what it's doing. I got friends asking me for internships for their kids, and you're looking at big corporate layoffs. No one's hiring the kids out of school because the low level stuff they're just pushing off to AI. It's real.
That's very interesting. I mean, I know that I have to keep up with it because even on the marketing end of things, like in my own marketing system, I can have it write a subject line, and it's better than mine. It's better than what I would do.
So, but you need to know how to manage it, right? So as long as you know what to ask it and how to manage it, make sure that you agree with it, that it looks right, that the man is on the side of the box and not on the box. You're like, nope, It's not right. I need to make it right.
I think, like I've talked about this before, one of the things AI is going to empower is weapons grade propaganda, because you know, it used to be if you had to fill a building like this one full of writers that were going to do propaganda, you had to pay them and feed them and let them go to the bathroom and let them have a family. But these things, you could just run computers to pump so much stuff out. I think the only solution is going to be cryptography. You're going to have to sign, is this actually a message from me, on some kind of a blockchain that people trust.
That's right. The deep, obviously, we're in an election year that's going to be a disaster no matter what happens. Like, it's a disaster today. And the deep fake, have you seen some of these deep
Oh,
fakes?
they're wild, man. And they do them to banks too. So you have somebody do a deep fake of a voice of a guy that they've had banking with them for 30 years.
Yeah.
Scary stuff.
Now they can do it in video.
Yeah. Oh, that I didn't know.
Oh, yeah. You're starting to see the bad propaganda out there on video. I mean, you can't, they could fake your mother and you won't be able to tell the difference. I mean, it's scary.
They did the voice one, which was just so crazy because it was anything they typed in, they could get this voice to say.
So you're seeing all these, I'm sure you get them. I get 30 spam calls a day. And the phones are getting good at flagging it as spam, but I get calls all the time. I don't have a landline. My cell phone's in my email signature. That's how founders call me to talk about their business. I never know the area code, you know. So when AT&T says it's spam, I don't answer it. But if it's a number I don't know, it doesn't say anything, hello? And when it's quiet, don't say anything else. Just hang up. They're
trying to collect information.
They're bots getting your voice.
Oh, man.
They're bots getting your voice.
Well, it's when we're recording on these microphones, I'm sure you can scrape these pretty easily.
One, everyone's got Amazon in their house so they can order milk, and Amazon, they've got a treasure trove of all of our voices. My kids fake it. They ask Alexa if they want to hear a song in the car. They'll go in and say the song. If it's a Taylor Swift song that's got bad language or something explicit, you know, they say, "Nina, you're not allowed." And then she turns her voice and says, "Alexa, play this." "Nina, you're not authorized to play that," or whatever. And then she goes, "Alexa, play this." And then it plays it. She thinks it's so cool that she tricked Alexa.
That's pretty clever, and that's going to happen all over the place.
They're learning the system.
So speaking, we were talking earlier about valuations in the stock market. NVIDIA is like just skyrocketing to the moon.
Yeah, it's the stock market.
It seems pretty dangerous to me
Yeah.
to have one, you know, whatever, with like 5 or 6 stocks basically keeping the entire thing afloat. What are your thoughts on that?
That's now buoying it, and you know, 2 years ago it was the FANG stocks, and that's why people bet the market, because you never know what you're going to miss if you select. And that's the reality of it. It's incredible, and it's not slowing down. It sure seems overvalued to me, but I'm not going to short it. I don't do public market stuff, but you would think it's way overpriced.
I mean, yeah, it's like, it seems to me to be like this FOMO craze that people don't want to miss out on it. I can't imagine how a company's value could go up that many days in a row for that much.
Because everyone's saying it's only going to get bigger, and they're sold out. They can't make chips fast enough, and they can't even build data centers fast enough. There's not enough power.
That's going to be the biggest
There's not
issue.
enough power. And you're talking about the Green Planet Initiative and all this stuff. You know Matthew Porter. He's another YPO, but you should have him in here. He's a big thinker. He's actually running for lieutenant governor right now, but he had Contigix.
Oh, yeah, sure.
So he was the founder of Contigix, but he's working in data centers right now. And the site selection for data centers is purely on where there's enough power. And guess what? We're a great place to have data centers because we have an incredible abundance of power from Ameren. We've got an incredible grid here. We've got land here. So there's an initiative, a state initiative, to build data centers in Missouri because we've got cheap power and we have a reasonable climate, and yeah, it's about power.
I mean, it's going to get, I think that will be the Manhattan Project, and we're going to realize how foolish we were for going so long without building nuclear energy.
Yeah.
Because the amount of demand that we're going to have is going to dwarf everything we've ever had combined.
Somebody, I saw in the next 15 years, we're going to need to double the power available. So we have 15 years, and it takes about 30 years to build a nuke.
Well, we don't even have the people quit going to school for nuclear engineering because there was nowhere for them to go. You couldn't get a job here.
Right.
So speaking of power generation, and we were talking about banking, where are you at on Bitcoin these days?
I'm not. I'm not. I'm out. I got out and stayed out, and I just watch it. And you got to focus on what you know. If you want to talk Web3 stuff, Jay Steinbach, another YPO guy, have Jay in here. He's the most knowledgeable person I know on the whole Web3. He runs a whole network of 5,000 global YPO members that are all in crypto and mining and coin trade and blockchain, the virtual worlds now. It's fascinating stuff, but it's like, if you're going to do Web3, do it. Don't dabble in it.
I like that. I agree with that.
And I lost my private key on my wallet. And
oh, no.
Looking at all my funny money, and then lost the key, and yeah.
So you keep mentioning YPO. For people that have never heard of that, what is it? And
Sorry, Young Presidents Organization.
So tell me about the Young Presidents Organization.
We're 40,000 members globally. There's criteria to join. It's leaders of companies get asked to join, and it's a great peer-to-peer learning organization. It's a great global network. I just had I was chapter chair. I just retired as chapter chair, but it's a $4 trillion organization. If you take all the member companies, and it's a neat organization.
Yeah, I've had a little bit of a chance to do like work, like for some meetings and stuff, and like people are in small groups,
forums.
Yeah, forums, and then those forums meet regularly. They have deep conversations. It's like a trust tree.
Yeah.
And then you have kind of like a wider organization, almost seemed to me like a Rotary, where you have like regional and larger, and then those groups are getting together. And I would imagine the network benefit of knowing other people running businesses and having the same kind of challenges, then you're quite valuable.
Yeah, that's a neat organization. Gotten a lot out of it.
What would you say you've gotten out of it?
The people. I mean, like anything, it's the people. Our chapter was started in 1950, so we're one of the oldest chapters. We've won more awards globally than I think any other chapter. We got 180 members here. We're one of the largest chapters. We pioneered a lot of firsts, different things globally that have been adopted. We invented here. St. Louis, as you know, is a very innovative town, very creative. So we've done a lot of the best practices adopted by YPO globally came out of here. One of our two chapter managers is like the official speaker around the world to teach other CMs. She gets flown to, I think she was just in Dublin talking to Europe CMs about how to run a great chapter, and it's great people, it's great events, it's great networking. So
you mentioned that we're in an election year and things are going to get really pretty rough. What are you imagining November 6th, the day after the election? What will November 6th be like in the United States?
God, I wish I knew. So we're invested in an amazing company. Scott Leindecker's the founder and CEO of it. It's called No Inc. And we actually support over 50% of the votes in this country, his technology platform. So when you go check in to vote, that iPad where you go up, you give them your ID and check in to vote, and then they print a ballot, that's all Scott's technology. And after the last disaster of an election, like the runoff in Atlanta. We have a service where we'll manage the election for you. We'll staff it and manage all your voting centers and whatnot. That's us. So we did the runoff so they could say it wasn't us, and it was flawless. Like we know what we're doing. We're really good at it. He'd actually be a great podcast if you want to talk about what's going on in the election space.
Yeah, I love that. Yeah.
And we don't tabulate. So there's 3 companies that do the actual tabulation, but you remember the name Dominion? Mm-hmm. We work with Dominion, and John, the CEO, is a great guy, and they did not do the stuff that was said. The other 2 companies, ES&S and Hart, there's 3 companies that do all the tabulation. We work with all of them. So we handle everything from voter registration to voter check-in, mail-in. We do all the stuff all the way through to printing the ballot, but we don't scan and tabulate. We stayed out of that because that's obviously where
the tension lies.
Yeah. So we're like, hey, we didn't count the vote. But we touch over 50% of the voters in the United States, and it's going international now. We do a lot of the countries in the Caribbean and Canada, and we got a couple European. So it's a neat company. It's based here.
What a field to be in. I mean, like, election integrity is what I think that no matter what happens, November 6th, half of the country is going to think that the other half cheated or lied or did something.
I know. And
I have no idea how, even if you did run a secure election, you would prove it.
Yep. And it's just, most Americans aren't crazy. You've got fringe people on both sides, and there's only 2 sides anymore. They've tried to get more parties involved, and the 2-party system is just solidified and cemented. But you got people on the fringes that can create the chaos for all of us. And most people are really in the middle, and it's the barbell theory. It's 5 to 10% on both sides, sort of make it all crazy, and it's scary because we all suffer.
Yeah, I think though that like the last few years have taught people that there are things that you're told about on the news, like, hey, everything's fine, or hey, do these things and everything's going to work out, and it didn't work out, or it didn't feel fine for a lot of people. So I think 10 years ago, the dumbbell theory probably was more accurate, but I think people have felt radicalized over the last few years.
Oh, yeah, we've seen it.
Yeah.
And I don't get political with anyone because it just goes nowhere. But look at what's happening. You've got a former president getting annihilated by the government. I mean, this is political. And the sitting president, like, going after his son. It's a disaster all around. And the problem is the rest of the world is watching this.
Oh, yeah.
We're supposed to be the leader of the free world, and they're looking at us like it's a clown show. I mean, it is a clown show. That's where we're all suffering.
Yeah, my sense is that, so, I spent a lot of time in rural America, and most of our country, when we were creating politicians, were created in these small communities that had to figure out how to work together. Yeah. Then there would be some leader among them that would go to a larger level, and on and on. And I don't think it was perfect. I think it's very easy to be nostalgic about the past. But I think that we had a system where you could at least, there were like an understanding about the way that the world will work if we all work together, or we find a way to resolve things. And at this point, I don't see a path back to normalcy. I mean, do you think there's a presidential candidate that could rise from the ashes and be like, come on, everybody, let's go to the middle?
No, is my answer. One of my forum mates runs campaigns, Victory Enterprises, Dave Hageman. He would be an amazing podcaster for you. he had an amazing human in Texas, guy Ryan, that he's just always liked. He's a business guy, loves the country, good patriot. The message, like, he seemed left to me, and then a friend of mine said, he's right. That tells me he's probably somewhere in the middle. And Dave represents Republicans. He was running as a Republican. This guy's message, I don't see how anyone in the country wouldn't say, you're my candidate. Like, if there was no party label, if he didn't have to declare a party label, that it was so good. And he hit all the metrics you had to hit, and never like got onto the stage. They kept like disqualifying him they were changing the rules for all the debates. This guy would have been a top contender on that stage, but the powers that be decided that he just shouldn't be there. And what people don't see is all the appealing going on and the proving of this, and here's the
all the ballot signatures and money and
behind the scenes, they're sitting here saying, here are your rules. He followed your rules. He should be on the stage. Well, he's just not. And I don't remember the specifics, but Dave would say this. Look at what they're doing. They're deciding who they want up there because it's the master of puppets kind of a thing. And it was really offensive because he was absolutely an amazing person. He wrote all these policies and never got to share them with us. What's cool is he's going to give a lot of that stuff and just say, look, I don't care who wins. These are just good policies that somebody ought to look at.
I would think that there's a guy sitting out in Nebraska or South Dakota right now listening to this podcast, and he's working on his farm, and he's saying, if a venture capitalist, his perception is that things are going on behind the curtain that he can't control, what hope do I, guy living way out in the middle of nowhere, have to change the system? So are we sunk? Like, is there any way back?
Well, I don't want to be a doomsday. There's no place better to live on the planet.
Yes, the cleanest dirty shirt, essentially.
But it's not good. And, I listen to my dad. My dad talks about how tough things were in the 60s, and he's like, this isn't that bad. So this is just our reality today, and it's not, the game's not over. Like, it's not, I hear people say they're going to give up their citizenship, and I'm like, and go where?
Yeah, like,
have
you been watching all this stuff with the president of El Salvador?
No.
So he cleaned up the country of El Salvador, and now he won a second term. And so all these dignitaries from all over the world flew down to see him. And I think he probably did clean up a really bad gang problem. But my guess is he did it as a wild dictator that is causing all kinds of that is solidifying power. And I think we're going to see more of that, because I think the people in El Salvador were sick of all the gangs and crime, and I think we're going to see the rise of dictators in our lifetime.
I went to boarding school with the president of El Salvador's daughter, which would have been, 35 years ago. And he was a cleanup back then. I went down and visited, and, we had the armed guards around us and all that. Incredible country. And my friend Dan's family was like the Schnucks family of El Salvador. All the grocery stores down there. And my family actually sold all the deli film and the meat film to their grocery chain. So it was neat being down there. They were in that cleanup mode. The company, my family's company, had a division in Argentina, and Argentina was great. Good leadership, very prosperous nation. Then it turns over and
Pyrenees
different
does, yeah.
leadership, and then you've got rampant inflation, and they start giving everything away, and the gangs take over, and it's all the shakedowns and in the port, and all the infrastructure falls apart, and that's what happened. Claudia's dad retires, then the new leadership comes in and tanks it. So all these countries down there just cycle like that, and it's really too bad. It's such an amazing, part of the world. If they could get there, Brazil does the same thing. It cycles.
We're experiencing inflation here in the United States that's bad for our lifetime. Do you think it gets corralled and contained?
I think it's slowed down. What was so infuriating to all of my friends was when they were telling us that it was transitory, and we're all looking at them saying, I've only ever heard of a raise, not a lower. There's no term for, hey, I'm taking that raise back and I'm going to lower your pay. And that's what you're seeing with all the layoffs right now, is when you couldn't hire anyone and it was get any warm body you could. And I mean, we went through that where we're just like, hire anybody. And we busted a lot of people that were bold enough to have 2 jobs posted on their LinkedIn profile. And we're like, we're paying you for full time. Like, you're telling people you work in 2 companies, really? So we cleaned house in 23. We riffed about 30% across the portfolio, but it was really a house cleaning from years of just hiring whoever you could and people, frankly, stealing from our companies. They weren't working. And that sort of reset stuff. But everyone else that got 20%, 30% raises, that's what they're getting paid. It costs us more today than 5 years ago to fund a Series A round.
Oh,
because all of our money goes to people.
Right.
So it's people to build tech, it's people to sell tech, it's people to manage the books in tech. It's all the stuff when you're scaling up a company. It's all labor. It's not rent. It's labor in AWS. So the teams were getting more out of really good people, but they are getting paid a lot. So we have to put more money into the business than we used to have to put into a business because people are making more, and which is fine. But if everyone's making more, that's where your inflation comes from, because people can afford more, and that's why milk was $3 a gallon and now it's $6.
And anybody that's run a company knows that an A player is worth like 4 B players.
Yeah.
But it's hard to justify that on a balance sheet, right? When you're trying to pay or payroll.
No, it's easy if you can find them.
Right.
But finding A players that's the magic. If you can build a whole team of A players, managing less people that can do a lot more is obviously easy because you don't have to manage them. But a lot of times A players go do it for themselves.
They've got other options they can do it themselves.
Right.
Yeah.
So, but we feel like our brand attracts talent because people know that we're a good firm to be a capital partner. And so we have a good network. We get good talent referred to us to work in portfolio companies, so we can help get the A players. And so if you can do more with less people, it's always better. The virtual thing, we're really trying to get people back in the office. We have companies that are virtual and stayed virtual, and it's working. It's hard.
Company culture is so difficult if people aren't in the office.
Yeah, that's really hard. So, but some people have figured it out.
When you and I were talking the last time you were on the podcast, we talked about SPACs and just how those were starting to go crazy. Are people still putting together SPACs? And
no one's putting them together. I don't know if there's any left. I mean, they all just got destroyed.
And why do you think that is?
It was kind of a scam. I mean, I think that's what we talked about.
Yeah,
It
kind
was
of.
crazy.
It's crazy, right?
I'm
All of a
just
sudden
gonna I'm just gonna raise a bucket of money, and you're just gonna trust that I'm that good. I'm gonna go find a deal. Just give me a bunch of money and blank check, and I'm gonna go find a deal, and I'm gonna take 20% of it. It was a scam, and the market was silly and threw a bunch of money at it, and then
yeah, probably a sign that we did have inflation going on, and that there was just so much liquidity running
that's
around.
where it all came from.
Yeah.
Free money, stupid amounts of free money, just shoveling money into
Anywhere you could potentially
anywhere
get a
you
return.
could put it.
Yeah.
And you felt like there was a cost to sitting on money because you made nothing on it. So you're just looking at it going, man, I got to put that money to work, or it's going to be worth less tomorrow.
I mean, I feel like that right now, right? Like
It's pretty incredible. So I mean, they shoveled all this money in, and now it's like, everyone's been out on a cocaine bender, and they just took the dope away, and government just shut it down. So they shoved it all in, and then they took it all back, and everyone's going, we're actually not worse off than we were from 19. If you just draw a line, it's been a nice growing economy, but somebody asked me the other day, a guy named Simon Crocker, you love him too. He works for BDT MSD. They manage $60 billion. And he did a presentation for our forum. And he showed this chart of excess cash, and it just grew like this, and then it shrank back down. And then he told a story. One of these schools did a study on gambling, and Harvard or somebody like that. And he gave two scenarios. One, you go in with $1,000 to the casino, and you ride it up to 10 grand, and then give most of it back, and you walk out with $1,000. B, go in with $1,000, you go down to $100, and then over the next few hours you get back to $1,000. Who is the happier of the two? Who is more excited to come back to the casino?
it's got to be the person that won it all the way back, that fought their way back, right?
Yeah. They both started with $1,000 and ended with $1,000, but when you were worth 10 and then crashed down, you're like, done, never going back. And because you tasted how big it was versus I got through it and I can do it again. So,
well, with those companies with boatloads of cash, I mean, they did have a problem. I mean, I was at Monsanto when they were looking around and saying, if we put this into R&D, maybe we'll get something back. And even if we get something back, the odds that we're going to get it through the regulations, it'll take us 13 years to bring this to market, is very difficult in chemistry, in manufacturing, and in a lot of different areas to get anything to pay because regulation.
And it'll move the needle. I mean, they bought a company that we invested in called Covercress.
Yeah.
And Baron Bunge bought it. And, yeah, it's a neat little business. It's a cover crop. Growing it, A, it's good for your soil. B, it helps runoff. And C, it's renewable jet fuel. And it's feed for chickens, poultry. But, they bought this thing, and even if it's a wild success, when you look at these businesses that are, I mean, Bunge's a $120 billion company. Bear Crop Science is a $65, $70 billion company. This little thing over the next 10 years could be a $500 million company. See the problem?
Yeah, it won't even
literally
show up.
doesn't move it's the right thing to do for the farmer. It's the right thing to do for the environment, but it literally doesn't move the needle. And that's what's hard about these companies that have gotten so big, is they can't spend the money on it because it doesn't, it's a distraction.
I think we all kind of, anybody that's been in the business world at all kind of knows that these bigger companies, how they form, right? You get these economies of scale, you get to be able to buy up other companies, you're buying talent, but they don't seem to deliver better products, and we all
Well, they stopped
know
innovating.
that. Yeah.
We are in a consolidation, even in venture. Every one of our companies is looking for stuff to buy because there's not a lot of new technology coming online. It's been coming online for the last 10 years. Now is contraction, so people run out of money, so people merge, so things you turn into the rollout. We've got SmartX I talked about. They're competing with InvestNet. We keep getting, not even soliciting, we keep getting top people from InvestNet because it was a roll-up of a lot of wealth tech companies, and they kept saying, oh, if we had this, we'd be better, and if we had this, we'd be better. But there's not even a single login for all the stuff they've bought. It's basically one name with 4 products, and you got to log into the 4 different products. So it may as well be 4 different companies. So they didn't get anything out of the merger, and it's so big that they stopped innovating. We sold one to NASDAQ, very gifted. It's called Solovis, very gifted entrepreneur. It's a wealth tech platform for like pensions and endowments. And it was a great return for us. He sells it to NASDAQ. Software hasn't changed in 3 years. And all the people that were building software left because it was so small that NASDAQ didn't really care. That's a great company, but they just stopped innovating. They're like, it's good enough. Just cash cow it. That's fine. A lot of these big firms, FIS, Fiserv, Black Diamond, everyone that's the best gets big and then stops innovating, and then new people come in with new tech platforms. The AI's the big driver now is because you can build stuff faster, better, cheaper, and that's what we're seeing. So we're looking for people using AI to build great companies. We don't invest in like people that say we're an AI company. That's a buzzword that they think they can just tack a zero under their valuation. They're a tech company and they should all be using AI. Our CTOs are like, everyone thinks it's like cool to talk AI. We've been doing this stuff for 5 years. It's not actually new if you're a technologist. So we've seen a lot of that.
We both live in the St. Louis community. The St. Louis city was given a huge wad of cash because of the Rams settlement, and now there's this constant question of what are they going to spend that on. What do you think of that? What should they be spending that money on?
I talked to a guy who was on that commission, and he said we ought to stick it in government securities and let it just sit there and not touch it for 5 years until there's a plan. The different things I've heard them talking about doing are just asinine. Just give a special one-time dividend to everyone in the city. Here's $1,000. That's not gonna do anything for the city or the region. The greatest opportunity we have right now in front of us, they own the airport, and Rhonda, who would be an awesome podcaster for you, who runs the airport. I just saw the latest version of the $3.5 billion makeover of the airport. Ground is breaking in 26. It's right around the corner where we're going to start seeing amazing stuff. Number one complaint I hear from people about St. Louis is our airport. There's nothing left we can do with our airport. She said, if we do nothing, we will spend, get this, $1 billion over the next 10 years, keeping it running the way it is. How sad is that? So we can put a plan in place to spend $3.5 billion and have an airport that'll go for the next 50 years. I mean, that airport was built in the 50s. So it's a cool plan. It's a great plan. It's the right plan. It's been signed off by the airlines really get to decide what happens. They've signed off on it. The FAA signed off on it. They're starting demolition. They're starting relocation. They're doing all this stuff. So we're going to have an amazing airport. First phase opens in 28. and then the rest of it, because you can't interrupt anything. So they basically have to open C and D, move everyone from A and B to C and D, tear down A and B, start the new terminal, then they flip everyone over to this terminal, tear down C and D, and then move Southwest over, and it's one massive terminal. So Southwest can connect to United. It's all the same carousel and all that. It's the modern airport. It's one place for customs, so we'll get more international flights and all that stuff. So very cool. The city should be supporting it. They have a pot of money where we could take that money and make it that much better. You know, we're doing a great plan, but that's money being spent on something that is amazing, and I just don't think there's any vision for doing something meaningful with that money.
Do you think St. Louis is a safe place to go?
Where in St. Louis?
St. Louis at all? I mean, I'm not talking about the north side. I mean, downtown.
I feel perfectly safe here. I'll tell you, the stories I'm hearing from people in San Francisco and New York, that stuff's scary.
Yeah, that's right.
I mean, if you go to the wrong place in any city, I think you can find a problem.
I was talking to a friend in like downtown San Francisco that like was talking to me being like, I'm being followed and harassed by a homeless man, and you could hear the guy yelling in the background. He's like, this is 2:00 in the afternoon.
Right. No,
it's not good.
That's a real problem. A friend of mine's daughter was walking dogs with her best friend in New York, and somebody pulled up alongside of them and stole her dog. I'm like, stole her dog? For ransom or something?
Yeah, for what?
Like, really just it's terrorism, right? It's just scare the crap out of them. So she left New York. She moved to Palm Beach. I'm like, that's just weird. Somebody stole your dog.
So I know you don't talk about politics, but do you have a sense for the mayoral election? Will this be one that will move the needle? It's Tashara Jones, the
Kara
incumbent,
said she's going to run.
And Kara Spencer, yeah.
I mean, Tashara's nice, and Kara, they're nice people, and everyone. I mean, I don't think people run. They run because they think they're running for the right reasons. I just look at the result of their work. I don't think that Tashara has improved downtown St. Louis. I mean, more people moved out, and I think the crime stuff's getting fixed because of GSL. I'm assuming you know about GSL. Greater St. Louis Inc.
Oh, tell me about it. Yeah, I don't think of them in that way.
Man, have Jason Hall in here. Happens to also be a YPOer, but I mean, so Andy Taylor and David Kemper put together this idea of getting a private sector person to just sidestep politics and create a nonprofit, and actually it's a roll-up. It was a consolidation of all the other civic organizations, the Regional Chamber of Commerce and the CVC, what does it stand for? The Visitors Commission and the Tourism Board and the all the civic progress. They rolled everything up, put Jason in place, and it's consolidating the messaging, it's consolidating the efforts in the region, and then they get people like us. We're a founding member of it, but it's streamlined all the efforts, and that's how we got the Lufthansa flight. That's how, the Butler building next to the MLS stadium, the meatpacking plant out in Forestel. That started as a $300 million project. Now it's $1 billion. It's going to be one of the biggest meatpacking plants in the country. We've got an Israeli business building the battery factory on River de Pere in South St. Louis. So Jason goes to work all day, every day, and he's got 100 people that are all just building the region. It's the east of the Mississippi, and it's west of the Missouri. It's the whole region. It's not city. It's not county. It's none of the politics. It's the whole region. It's the Boeing project. They're spending $1.5 billion building the next gen fighter. It's incredible. If you drive down 170 and look at the acres that they're scraping and building this incredible plant expansion. So there's good stuff going on here, and all of it is touched by GSL. So he's incredible. He's a good friend. He's doing an amazing job, and we're very lucky to have him.
Well, I've been asking a lot of people that have come through here about St. Louis, and that's the most hopeful message I've heard said in a long time.
We got great stuff. Our biggest problem is we don't promote what's going on here. Like, that's what GSL, they have a newsletter that comes out every Friday. It's like the wins of the week, and there's stuff happening here like, holy crap, like that's serious. I mean, there's billions of dollars of development going on, and there is job growth. We are so big geographically that you read about all these parts of St. Louis that lost population, and it's the other problem is all the municipalities. We got 93 municipalities, so it's like this little town of 5,000 people loses 50 people, and then they show that there's the 1% population decline, and they moved 2 blocks away to another little town of 5,000 people. Hey, they grew 1%. I mean, it's stupid. And, we tried to merge city and county to fix a lot of this stuff, and obviously didn't work with Better Together. There's another initiative that should be announced shortly. When it gets announced, I'll give you that guy. But it's an incredibly brilliant and easy plan to sidestep all the nonsense and make it a region. And, that GSL, changing a legal structure, everyone keep more to come. That's a good one, but no, I'm incredibly optimistic. I was at a party with John Kemper, CEO of Commerce, in their new building they just built. And I just said, man, it is so cool being in a fresh, brand new building.
It's right over there. Yeah.
Thank you for doing this. He says, Rick, we invest in St. Louis every day, which is cool, right? Banks lend money to people to buy houses and for companies. But he's just a super guy, and they built that building, and bet on St. Louis. There's a lot of people betting on St. Louis, so we just need to get the word out.
Well, Rick, I want to thank you so much for coming down here. If people wanted to learn more about FinTop Capital, where should they go?
Go to our website, for one, or call me. Happy to chat.